Good morning, good morning. Happy Monday, everybody. How's everybody doing? Everyone have a good weekend? Green, Ronan, Sadiq, Nano, hey Jiraj. Troy, how you doing? Jag, good stuff. Welcome, and welcome to the folks joining us on YouTube. I'm JJ. This is the tradingsyndicate.org, and this is where we teach real people how to make real money. Okay? Everything we do here is practical. To help you navigate the market so you can make a living. Okay. So, this morning we had an interesting question about what clothes to use in the room. Now, here's the thing about retail trading. Hey Lear, how you doing? In retail trading, people have all sorts of theories and all sorts of things, and things are written all over the place, and that's all great and good. But what I want you to remember is when you use a reference or you use something that people talk about, can you back up why and show your work? What is the actual business reason that you're doing this and you're thinking of it? Now, I'm going to use the close of business as an example. So, we are retail traders, okay? We don't have to mark our portfolios to market. We're not being judged on those things, right? We trade for income to make a P&L, okay? So the close that you're supposed to use is the close that tracks inventory the best. Now, if you look at this chart, this is a market profile chart. And this morning I did a little demonstration. See where this red line is? That's where the spike happened yesterday in the last hour of trading. Now, this is from 4 o'clock p.m. to 5 o'clock. So I use the 5 p.m. close. I teach everybody to use the 5 p.m. Eastern Time close. This gives me a distinct advantage when everybody else uses either the Chicago settle or the 4 p.m. close, right? Hey, Moran, how you doing? What's the advantage? The advantage tells me exactly where the inventory is from the previous day, where it is marked, and it also gives me very good information. Now I'm going to go take this profile here and I'm going to split it. What that means is I'm going to show every half-hour bar like you would if you had a half-hour candle chart. So when you do that, you can clearly see where that price spike happened at the end of the day on Friday. You could see the market came in, it looked below and failed, and then it failed to break that level for hours. Then it looked below and failed again. Now it's underneath that spike, okay? So overnight inventory is short. And if you were trading at this hour, wouldn't you like to know why there's buying at 64.19? Because if you can understand why there's buying, if you're shorting it down, you know to close here. If you're looking to go long, you can go long there, right? And that's why we use the 5 p.m. close. I'm going to just separate this out. Once again, you have to be able to back up why you're using something by giving me the business reason to do it. Otherwise, it's all just speculation, isn't it? Right? And what, oh, I heard this guy uses this, I heard this and that, and all that nonsense. This way, you actually have a business reason, right? We're looking for the bid. Right now, we're looking for the bid. Inventory is short. It's about 80% short, but we still have pressure downwards, right? We still have, why is that? Because people got trapped between 18 and 26, and they're all kind of leaking out slowly. Now, when inventory is short, we're looking for this move up. But obviously, pre-market, the market is telling us 20 minutes early that there's still some selling pressure. What causes selling pressure? Well, selling pressure is caused by wholesale competing and moving price lower. Who are they competing with? They're competing with themselves, and they're also competing with trapped longs. So if I sell you contracts here, and it breaks this level, you're going to start to sell. But because I paid this much for my contracts and you paid this much, I'm going to take you out at your knees and sell it down, right? So that's what we're looking for. We're looking for these lower levels. And if overnight inventory is short and we do not get above Friday's close, remember Friday they high closed the market. This is another thing. Now I know it's Monday morning, and I know I've probably had way too much coffee, and I'm probably going to have another one. So you're going to have to bear with me. But surprisingly, I have my wits about me on a Monday morning. Well, it's Monday afternoon here. Why is the market not doing what it normally does? Usually if overnight inventory is short, it corrects up. If overnight inventory is long, it corrects down. But about 30% of the time, this does not happen. Why? Aha. Because this was pure markup on Friday. And this is another reason why you look at that 5 p.m. close. Because it tells you that this really wasn't real buying. This was forced buying. Right? So it's forced buying on a Friday to make all the longs feel really good. And if the order flow supported it, they high closed it. Do you know, in the old days, we used to always high close a stock. Like say I was running 5 or 10 stocks for my clients during the week. On Friday, in the last half hour of trading, I'm going to make sure that I put in buy orders so those stocks close up. Why is that? Because people look at their portfolios and they look at the stocks that they bought on the weekend. And if you high close a stock on Friday, guess what? People will buy more on Monday. Makes the longs feel happy. You want people that when you jam people into a stock, you want them to feel good about it so they don't sell it and you have to buy it back. You also want them to buy more. So if the stock keeps going up, they buy more, they tell 2 friends, and so on and so on and so on. And then next thing you know, you have good distribution, right? This is this is how markets are, created and how they are worked, right? This is the psychology of marketing. Make people feel good about what they bought. You don't want to make people feel bad that they bought something because they're not going to buy anymore, right? Multi-level marketing. Exactly. Here are the levels. Let's mark it up, right? There was a guy in our firm, and he used to do it so much he actually got nailed by the exchange. We used to call him Johnny Uptick because he would high close everything, and not even on Fridays. Sometimes on a Monday he would high close stuff. So Johnny Uptick, yeah, they gave him a 1 month ban. But you know, in our industry, when you get a ban, he and his wife went to France for a month. But that's why this buying is not really holding, right? Because it's sort of window dressing at the end of the day. So let's see what happens. I think we're going to trade between Friday's close and the overnight low. If we don't get up and take out Friday's high, look for rotation back down. Now let's go and see, right, where are my dyed-in-the-wool short sellers, right? Let's go and look at some areas where short sellers are going to be bid to cover. So if you're shorting the market, where can you expect buying? So say you're short 16, 17 right here, right? The first place you're going to expect buying is 13. The second place you're going to expect buying is 12, and then the overnight low. If we break the overnight low, you're going to look for buying at 64.02, right? Very simple, right? You use these lows, the low of every half-hour candle, as a target, because that's where the short sellers will be waiting like hungry dogs for product to fall out so they can cover their shorts. This is where they're short from on Friday. This is that afternoon pullback low that Jim Dalton talks about. That's that afternoon pullback low into a markup. So people are short under 64.04. If that breaks, then we'll be looking for 63.88, 63.90, okay? And then, of course, the previous low goes without saying. That's the lower scenario, okay? That's just because it's acting this way right now. Right? You guys would say it's trading heavy, that there's sellers at 19, which is true. Now, if by some weird reason, because we have what, 18 minutes to go before the open, right? Yeah, also there's a poor high, right? Good spot, Sadiq. How you doing over there? You okay? Missing Coquitlam? There's a poor low, so there's competitive selling up here. If by any chance we take out that overnight high, right? Because we should be prepared for a couple of scenarios, right, as traders, right? So if we take out that overnight high at 64.29.5, you can see that right here, there are stops, right? So those will be your upside targets, right? So if we take out the overnight high, your first set of stops is going to be around 64.35. We could use 38.25 if you want, but more precise will be that 44.75 level, and of course our all-time high at 51. Okay, so that's what you're looking for on the upside. Now, in this kind of a market, if we do break up to the upside, because overnight inventory is short, maybe these guys are playing possum right now. They're not showing their hand, but they'll come in when the market opens. You know, sometimes if you're a short seller, has anybody on this call ever been short size? Like a big position? I'm not talking 5 contracts. I'm talking like, 200,000, 400,000, 500,000 shares of a stock. When you're short size, you don't want, and it's kind of dripping down like this, you might want to wait until the market opens, right? Try and cover as much as you can quietly, right? Because if you start showing a lot of big buy orders, guess what? They'll start moving the price up on you, right? So you don't want to show your hand. So sometimes that's why these futures, the morning, that opening, can be a little tricky, because right now it looks weak. But if we can't take out these lower levels, do look for a move back up because overnight inventory is what, 83% short. What does that mean? It means that 83% of the traded volume in the overnight session is underneath Friday's close. Something to think about, right? That's why trading the open can kind of be messy sometimes because it's not really clear, right? So if any of you are watching this and, if you've ever had trouble trading the open, don't feel bad, right? Nobody actually goes and trades the opening auction of a market, that opening sequence. And it's not something that you just, oh, this is really easy to do. Nobody just jumps out of the womb and is able to trade, especially the open, perfectly well. It takes time, right? And sometimes you got to let the market open a little bit, let it set itself up, show you some structure and direction before you jump in there, right? Hey, Derek, how you been? Hope you had a good vacation, right? So if you're confused when the market opens, don't feel bad. Don't beat yourself up. Just chill and relax, right? And let the market show you its hand, right? Exactly, Joel. Set up for success, right? Hey, business contact, what I do is I separate them out. So this is Friday's RTH. This is Sunday 6 p.m. till now. And then we'll have at 9:30 we'll have a new profile. So I do separate them. Do I ever trade the NQ? No. I traded the NQ once when one of my friends was down 30 grand in a short and I had to help trade her out of it. Otherwise, she would have lost 30 grand. But other than that, I don't trade it. Just two splits. So if you look um, I'm in UK, so 2:30 to 2200 to 10 o'clock. And then I start at 2300, which is 6 p.m. New York time. And then we start 1 minute before. I just trade ES. I like knowing one market really well. No, questions are good. That's why I'm here, right? I'm here to answer questions, right? I appreciate it. It shows that that you have an interest, right? That's cool, right? The NQ, I don't poo-poo trading the NQ, but for me it's too thin. What I don't like about the NQ is it's not a thick order book, and these market, I don't know, it's just for me. I know the ES. That's what I learned how to trade on the ES, and I really know it well. So I try not to mess with it, you know. Hey, Sonny, how you doing? Yeah, it was a good weekend. I went to visit my girlfriend in Somerset, which is a nice place. It's kind of like a place where rich people have farms, and they kind of pretend they're farmers. It's very hoity-toity. I don't know. It wasn't really my scene, but hey, she loves it. Yeah, I like the ES. It's for me, it's like for me the ES is old reliable, right? It we have an understanding. I know when to trade it. I know when to leave it alone. Yeah, it's something else, Tebow. That area is pretty. You're like in the middle of nowhere, and then there's all this. Excuse my language. Like these massive, big ass houses in the middle of nowhere. It's like, ooh, okay. But so right now we're underneath VWAP. We did some distribution above. We're underneath. If someone came into 500,000 shares of stock and they wanted to sell it, I'm the guy. I'm what they call an executing trader. So there's two kinds of traders, right? There's proprietary traders and there's executing traders, right? Me, the ES has smoother price action than the NQ. I'm an executing trader. So if you need to get rid of 20 million, 150 million, 300 million shares of stock, I'm your guy. Right? And you're wondering who has 50 million shares of a stock. Well, if you took your company public, say you had a company that had some proprietary, say you were a dentist and you came up with some sort of new tool, or say, like the guy who invented LASIK eye surgery when he took that public, right? Then they have a whole bunch of stock, and if the deal is not big enough for an investment bank, then someone like me makes a market and helps sell the stock. So we've got sellers at 19 and a quarter. All right, let's see. It's going to be a very curious Monday morning. I also have to remind myself that it is the middle of summer, right? And business is still being done, but I mean, let's face it. Like the really, really big fund managers and traders, August is not really, especially after earnings, right? August is kind of a time where they're kind of chilling out still, right? And at these all-time highs, it's hard to reliably determine direction. So you got to be on your toes, folks, right? Like my offensive line coach would say, right? Head on a swivel, right? Keep your head on a swivel so you can pick up that blitzing linebacker, right? Very important. Very important. Now let's see. Remember the stops that we were talking about? Right? Down here, 13, 12, and the overnight low. Those are our lower targets. So say you were initiating a short, say you went, hey, you know what? I'm on the ball this morning. I've had my coffee. I see sellers at 19 and a quarter. I'm going to short 18 and a half. Put my stop here, right? I'm going to look for bids just here. I do not believe in these confluence flatulence thing, right? I am a firm believer on keeping your eye on the traffic of the street that you are trying to cross. If you are trying to cross ES Avenue and you're looking at the order flow on YM or the Russell, you are going to get run over or hit by a car. Now, I know that there are senior traders who do look at that and they correlate markets, but I strongly suggest if you are not consistently profitable, right? And basically, if you don't know what you're doing, don't look at other markets when you're trying to trade one. Focus on the market you're trying to trade. Hey, Patty, how are you doing? Well, there's ways of getting rid of 500,000. You don't want to dump the stock all in one go, OJ. Depends on how much it trades. Now, if it's Microsoft, you could get rid of it in one day, right? If it's Tesla, you could sell it. But if it's a thinly traded stock and you try and dump 500,000 shares, yeah, maybe it's best to feather it out. Give me a DM me. If you actually have that scenario, I can help out. I'll do it for free if you want. See, we're getting a little bit of buying at 16. Just DM me anytime. Oh, that's good, Patty. Maybe the country air helped my brain. I think bookmap is an absolute waste of time, and I think footprint charts are a waste of time as well. I have one video where I use a footprint chart as a teaching tool because people kind of pay attention when I show the video. One of my buddies made this video, and it's how a low is created. He didn't actually think about that when he was making the video, but I took the video and I've been using it to show people how a low is created. But I really don't think bookmap, you know, bookmap, first of all, is the data correct? I've seen big arguments on X whether or not bookmap is actually using proper data. And are you trading 5, 10,000 ES contracts? If you're not, you don't need that all that stuff. Honestly, all you need is a 1 minute candle chart. Now, I said this to you guys earlier in the session, right? Aren't you guys tired? Aren't you guys tired of looking at 15, 20 different things and not making any money? Wouldn't life be better if all you had to do was look at one or two things and actually make money? Do you know what I mean? Like, surely you guys must be tired of going and looking at this and looking at that and looking at this and using this chart and that chart, and like it's tiring. I know I was when I first started retail trading, trying all this stuff. It's tiring, right? Because they don't tell you actually how to use it. And that's what I do. That's my goal here. See, there you go. There's that little, look at that, right? 1 minute before the open, got some sell orders, right? Now let's see if we take out the 13s. Look where we stopped. We stopped right before that 13, right? So that's information that you can use. So say you were short. Remember I said short 18 and a half, stop 19 quarter? You know, maybe do some covering here at 14. Pick up 4 or 5 points before the open. 4 points on one contract is $200. Multiply that by 4, you got an $800 trade before the open. Hey, Demac, good morning. The less information you have to look at while you are in the heat of battle, the better your execution will be, the more smooth your execution will be. You're not going to be fumbling around looking at 20 or 30 different things. You got a 1 minute candle chart, you don't even need market profile. You can use a half-hour candle chart and mark the tops and the bottoms to know where the half-hour stops are. Really simple, okay? Okay? But just use this to execute. You know, if you want to learn how to make money in this industry, I'm not going to BS you. I'm not going to try and sell you software. I'm just going to get you to work hard. So here we go. Let's see where the seller steps in, okay? Because I'm seeing sellers off the open right away, right? If we can't get over 16 and 3/4, we'll go short. First stop it'll be 13 and 3/4 on the downside, right? Maybe 14 bid. Right? We're seeing some bids at 15. I want to wait till the next candle opens. And I covered one lot at 14 1/4. And that second candle, let me see if those sellers are still there, right? I'm short 16. And I think I'm going to cover 14 1/4. I'm flat at 14 1/4, right? I'm a nervous short seller, right? This market has limited supply, so I will generally front run levels if I'm short. So there's a little look below and fail of 13 1/2, back up. Let's see where the sellers step in. It's only been 2 minutes, right? So the market's now telling us where the sellers are and where they stop selling, right? That's information that you can use. See? See how simple it is? Right? You know that they stopped selling here. Why? Because they see a bunch of buy orders. Think of this like a glass door, right? If they see those buyers starting to walk away, they'll go and chase them down, right? Watch. Watch 13 1/4, 13 1/2, right? Glass door. So far, they can stay above. If we start running out of buyers, they're going to chase them down to 11 3/4, which is right here. Oh. I'll let them work this out right now. I don't feel comfortable yet. Maybe when the next candle opens, if the next candle opens and stays above 13 1/2, I'd consider a long. Consider. Give it some time. It's starting to offer lower. And back up. So it keeps finding bids under 13 1/2. If I did go long here, I'm hesitating. I'm hesitating. I'm hesitating. Yeah, it's offering lower, so it's underneath 13 1/2. No reason for me to be long. And remember, what did I say before the open? If it can't get up here and take out the close, it'll rotate down and most probably test that overnight low. And here we go, folks. Now, Friday's cost basis is here at 9. So let's see if we stop selling off at 9. How do you tell the difference between a heavy liquidation and an inventory adjustment? Heavy liquidation will go past cost basis, right? Which means that the wholesalers have to put it on sale and take a loss. If they can stop where they paid for it, they can still sell here at a profit, right? But down here, they're selling at a loss, right? If you use the point of control. Seller at 13 1/2. Hey, Jeff, good morning. How you doing? Now right here, I will leave it alone until it takes an edge. It's got to come back over 13, 14 for me to be interested in a long, right? See, it's very easy. I always get sucked into buying that candle and then get stopped out. It's really easy to happen. Very easy. That's why I have to be patient because my impulse is to buy that candle and then get stopped out and then the trade work, right? Which is a bit of a pain. So I've learned the hard way to just wait and let it try and close over 13 and a half. There we go. And remember, if you are long, there's inventory above. So if you're buying the look below and fail, sell them if you got them. Sell them into strength. So say you're long 14 and a half, 3/4. Make sure you're offered because look, there's sellers, right? Take small profits when you're learning how to trade. Don't try and hit home runs. A base hit here, a base hit there. It'll help put some cash in your pocket and it'll help you grow your confidence, right? Because what happens is you keep trying for these 20, 30 point trades when you don't have the skill. And then what happens is you end up destroying your mental health and your wallet. Don't do that. I mean, I would rather make $50 a day than lose $2,000 a day. There you go, Troy. And we still haven't done our session. We'll do that this week. I had a bit of health issues last week. But we'll do our one-on-one session this week, right? Oh yeah, everything's good. Just getting a little old, That's all. Now let's see if it holds 13 and a half. Right? See how choppy it is, and this is horrible to trade because it's not smooth, right? But the lows of these candles are higher, so that's one thing. Now I want to hold on and see if that candle can hold. If we can hold 13 and a half, then we can maybe put in a little buy. Oh, I screwed up. I'm long 15. Not the greatest entry. Not the greatest entry. Right? If it can't get over, right? If we can't break 15 and 3/4, I'm scratching this trade. Let's see what this candle does. Right? I screwed up the entry. I'm way too high on my entry. Oh, sellers at 16. I'm out. Right? I was just on one contract. Maybe I'm out too premature. Let's see. Shorting this market is like pulling teeth without Novocaine. It's just a pain. It's just, it's okay to short for what I call hit and run shorts, but any kind of position short, I mean, we're at all-time highs, right? We're at all-time highs. There's no inventory above us. All the sellers are on vacation, and the earnings weren't bad. Trump speaking at 10? Ugh. Oh, that's no good. Doesn't he go on holiday like other presidents? Exactly, Nano. Shorting this market on any kind of a long-term level You're right. It's like using a wood chipper as a masseuse. All right, let's see if we can take out the 17 and a halves here. And the choppier it is, right? The choppier it is, the more people short it. Oh, excuse me. Sorry. Hey, Hank, how you doing? The thing about chop is it induces us to overtrade. So that's one thing that we really want to not overtrade. I'm good, Hank. I'm good. I don't see a trade just yet. See, and we're right in the middle of the opening range. See this little white letter? That's right in the middle of the opening range, right? So, oh, look, a buy order. Interesting. I didn't catch that. Okay, so there's bids under 13 and a half. They just showed their hand. This green candle, they just showed their hand. Okay, let's see. Now, another thing that traders do when it's slow and choppy, and you see that there are bids here, you could try building a little position in the bottom half of this range and then selling it as it gets up there. Like, say you buy a couple at 16, right? Sell one at 17 and three quarters, right? Sell one at 18, flip in and out, couple of points here, couple of points there, right? Yeah, I survived my trip to the country. I don't think I'm a country guy, though. I felt pretty claustrophobic. UK's got these really tiny roads, and there's hedges on both sides. You can't see. He's not talking about the market? Thanks, Alexander. That's great. So, when you're scalping, people are like, well, say you can't make decent money scalping. You can make, on a couple of contracts, if you make 10 to 14 points a day scalping, that's not bad. It's not bad. Let's see if we can get. See, remember there was a wall of sellers here at 19? Here. See, they were here, 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 here. Right? They're still there. Right? So if you were going long, sell into the strength before somebody else takes your client, your customer. Right? Once we build up enough buyers here, we'll be able to get past that level. Right? And I'm sure VWAP is right there as well. So let me just go check. Yeah, it's right there. Good stuff, Sadiq. Good, good, good. How's the internet where you are? You got stable internet? Interesting choice. It's good stuff, Juice. Can't get by those sellers, so they start to compete, pushing price down again. Right? It's a slow Monday morning, 65,000 contracts in the first 15 minutes. You know, let's see what comes in next. Right, we're always waiting for the next piece of information. Oh, that's good, Sadiq. Good stuff. Yeah, I figured with all the tech going on, they must have decent infrastructure. And let's see if we can get past VWAP now. Tight range this morning. You know, 10, we haven't even broken 20 yet. So it's a tight range. Yeah, this is like right now, this is where a lot of retail traders get pickpocketed, right? This is a real pickpocket market right now. Chop, back and forth, back and forth. Let's see. So while it's chopping around, we'll do a little plug for our room at the Trading Syndicate. I think Steve still got his special sale going. Come give us a shot for a month. Spend some time with us. And if you are looking to trade funded accounts, we'll help you pass your evaluations. Check this out, folks. And you'll use, we always have specials with our friends at Apex and Take Profit Trader. This is where the spike was from Friday. Steve's my partner in the room. There's the spike. He runs all of the admin. Look how A period came right where that spike base is. Did you guys see that? Do you think that's coincidental? There's no such thing as coincidence in finance. Just so you know. Right? The A high is exactly at the spike base. Right? All of the inventory in the overnight is above the spike base. That's what's causing that selling pressure, those trapped longs. Right? It's pretty interesting. There's some things in market profile, they give you a lot of details with these market profile charts. Sometimes too many details. But I thought that was interesting. It's all random. Yeah, billionaires just throw random money around every day, right, Mark? Hank? more in depth on the balance zones from our previous conversation. Could you remind me of it a bit? So how far did we go on the balance zones? So balance is two-sided trade. What is two-sided trade? Two-sided trade happens when the market's waiting for more customers to come in. So it goes back and forth in a zone. When it goes back and forth in a zone over time, that builds up inventory or cost basis, right? That's where you buy your inventory. It's like you're spending time in Costco buying your inventory that you're going to sell in your corner store at a higher price. And then you just double the balance zone to get profit, and areas where you have 2 times profit, and then areas where you have to put it on sale. Yeah, well, we have the only short I saw was when there were sellers here off the open down, and then I missed that one there. But Troy, a look above and fail is when it use the chart. Don't use the TPO. Hey Josh, how you doing? Charlie, did I answer your questions, or what specifically are you kind of looking for? You can always DM me if I miss something, right? So I sent you the videos, right? I'm just looking at our conversation on DM. Let me know. And now let's see if we can stay under 13. Right? If we can't get back under 13, we're going to go test that overnight low. So if you're shorting 12, 12 and a half, your stop's going to be 13 and a half, and you're going to be covering somewhere around 9, 10. You know, I'm test short 1 at 12. Going to put a 10 and a half bid in, see if I can get hit. If it lifts up above 12, then I know I lost my seller, and I scratch the trade. Pretty simple, right? So it lifts in 12, 12 and a half, 12 and 3/4. I know my seller is gone. If my seller is still here, I'm good. But if my seller is gone, it's going to rotate back up to 13 and a half. Do I need to be short when everyone's buying? Think about it, right? Good thing you got out there, AZS. Until I make sure that that seller's not... See, the seller's there, right? So I'm okay. Soon as it starts creeping over 13, I know my goose is cooked, right? right? So if you screw up the short and it holds 13 and a half, 14, it'll be long back up to 15, 16, right? This is the concept of rotation. And folks, I think our early morning rotation is here, if I am not mistaken, right? So there's our low and I'd say that's probably our rotation right there. Let's see. It's coming back and testing it. There's the bid at 13 and a half, 14, right? Right, so there your long 14, sorry. I put out one at 15 and a quarter and see if they'll take it. Right? If they don't take it at a quarter, then I know to start cutting contracts. Out one at a quarter, out one at 3/4. I got one left, out at 16. Right? Quick hops. You know, log 14, out one here, out one there. Nice simple trades. Right? Now let's see if we have sellers where we mark that there are going to be sellers. The thing is, once you get the concept of rotation, you could always trade bigger rotations once you get skill, right? So this rotation is between 10 and 16, 17, okay? Once you do this and you start making money, then you can start branching out and doing larger rotations, right? You get larger rotations once you build up the skill. See? There's that rotation back down. I just looked up in the chat. You guys are talking about free continental breakfast. Okay. Now, let's see. Can we finally get above VWAP? Can we get above VWAP and take out the 1920s? Let's see. If you're long, sell into the breakout. Because what we're going to try and do is we take this inventory and go sell it up here. Okay, and B period opens up. Poor high. There's a bit of competitive selling at 19, right? But it's not like we didn't know, right? We saw them here, 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 right? So when you have an area where you know there's going to be resistance, right? The top of the candle is where sellers initiate. So if you were long and you came up into the top of that candle, right? So if you were long 15, you know where to punt out of it, right? Just common sense. You can tell so much from a 1 minute chart. See, you don't need bookmap, you don't need footprint charts, all that stuff. And I respect that people like using it, but why overcomplicate your life if you don't have to? Right? I mean, wouldn't you just rather look at one chart, make some money, and then go golfing or go to the beach or whatever it is you like to do? Right? So it's safe to assume that our position is in this area here, right? Under 19 down to 13 and a half. If I went and drew a volume profile, right? If I drew a volume profile, just say from here down to here, look at all that volume, right? If I took that and extended it out, you'd see the liquidating volumes all under 64.20, 64.19. So the goal now in a market is to take this, and if we get enough people coming in now, because they see price stability, we can go and retail it out up here above VWAP, right? So just remember, whether you're scalping or whether you're building a position, as the market goes up, to sell into it. Because that's what all the smart money is doing. And don't you want to be smart money? Right? There we go. Right? Right, there you go, Hank. Right, it's poking its head above that 19 quarter. Can we keep going? Right? Not yet. Right? It's not ready. We don't have enough customers, right, to justify raising price yet. And we've got competition at 19, right? That's why I tell you guys to sell into strength, right? If I'm long 15, I'd love to get 28 for it. But is that reasonable right now? Right? I own my product at 15. Is it realistic to try and get rid of it at 28 when everybody in the world is selling 19? So trading, education and trading has to be practical. It has to match the conditions that are in business at the time, right? It's delusional to think that it's going to go up here. I mean, unless you get a news spike or something like that, right? That I understand, but how reliable is that to buy something and hope for an event, right? When you could easily make 14, 15 to 18, 19, that's good money. Back and forth there, right? 4 points on 10 contracts. That's a nice trade. 4 points on 5 contracts. That's a nice trade, right? You don't have to hold for 30, 40 points, especially when a market, you have to trade according to the conditions of the market, right? You can't say I want 30-point trades when the market's in a 10-point range, right? It just doesn't make any sense. We want to be practical and realistic. I know it's boring, but at least your bills will be paid, right? Okay, you guys on YouTube, you guys still awake? You were talking about continental breakfast. What, you guys all have too much orange juice and now are in diabetic coma, or what's going on over there? Jeez, there were some good questions, and then everybody just disappeared, right? We're all on a sugar buzz from like free muffins and donuts. I know it's Monday and it's summer, right? Nobody wants to work. I get it. I get it. Okay. No questions? No? Okay. Oh, this is going to put everybody to sleep. If you have a failed rotation back down, what does that mean, Jarash? Failed rotation back down. Like if it stops rotating here? So if this is our rotation, if it kind of stops in the middle, yeah. Now the problem is common sense would say, okay, if you can't get back up, then that's what you're looking for, right? Problem is it's not exactly reliable. Why is it not reliable? Because I haven't looked at it enough and done the work. So if you want to keep track of that, that would be a good thing. That's a good question, right? So I'm not beating up on your question. I'm just saying that I haven't done the work to see how many times out of 1,000 observations is that right or is it wrong, right? Hey Renee, how you doing? Good to see you. Right. So what I say to you, my friend, is run the numbers and let me know because I'd be very interested to know how accurate that is. Right. But in trading, we need sample size, right? Not just one or two times. You know, we need to see out of 500, 1,000 times minimum how much that actually works. So run it. Keep track, right? And let me know how it goes because I'm very curious. I have a question. If inventory is 100% long or short, but we open at yesterday's close, no correction, Well, see, here inventory was 83% short, Cloner, and we are only getting a move up now, right? That correction to inventory move is happening, I don't know, 45 minutes into the opening of the market. So it's giving us an indication that they had slow, a slow open, not a lot of buyers. It took long for this price stability to get people to come in and buy. So we can now try raising prices over 21. So if you don't get a correction, if overnight inventory is 100% long and it doesn't correct at all to the short side, down to the downside, that means the shorts are really trapped in their buying. If inventory is 100% short and you don't get any upward movement, you know you've got a seller. Okay, cool, Moran. I know you observe these things, so that's good. No problem. The hardest part about all of this is taking all this information and stuffing it into a trade where it's not overly complicated, you know? That's the hardest thing I found in retail trading is what information do I need? And then how do I actually use all that information and piece it together in an execution model so I can actually make money? That's really the hard part. And then how do I do it where it's repeatable, where it's scalable, right? Where I can, and that's it's not easy. It's not easy at all. So we got to the overnight point of control, sellers right there, right where I said we had sellers. We hit it. Yeah, the business is there. It's operating, Josh, but it's a slow morning, right? Yeah. One of our guys has a shop where they sell stuff, and it's the exact same as their store. It's just the chart is telling us how sales are going minute by minute, right? Instead of him and his dad looking at the end of the day, right? And see how sales were. So if this was like a really big store, like a Walmart, you'd have a computer system that tells you how many TVs worldwide are you selling minute by minute. And you could run a chart, right? Or do we have to put them on sale? You know? That's really all we're watching. It's just here we're trying to unload ES contracts. So back under 19 again. Back under 19. I'm curious if we can take out the 15s now. Boy, this will put the best people to sleep. Gosh. Okay. Okay. Well, anyone's still awake? And they stopped selling it around 15. Not just yet, Kunj. Right? I know everyone's wanting a liquidation. I'd like one too and get better price action. But the problem is, do you see this right here? In the last half hour of the day, the market opened and pulled back all the way to 64.02. And sure, that allowed a lot of the people who were caught short up here to come in and cover. But what also it did is at the end of the day, Friday, a lot of people shorted this move down, right? They got trapped. So that's why there's so much buying when we're coming into some of these lows, because they're trapped shorts underneath, all in here, this huge area, right? Yeah, we can't get underneath the overnight low. So eventually, if that continues, we are going to rotate up. And once we get over that 23 stop, let's see if we can go tickle that 64.25 close. And yeah, it feels like an overextended. Would I class this as a new trading? No, not for you, right? I mean, you've been up now since 7:30. Like you were on my morning session, right? You're in the UK. Just leave it. Just leave it. I know you could still trade the rotation, right? You just draw a box and trade it if you want, right? But there's no reason to change any of this. You know what I mean? Now, if you were just sitting down and starting your trading day, right, you would use this rotation here, right? Like, say, this area here, this back and forth, right? But for now, just leave it be. I know when it's slow, you want to change things. You want to look for something, right? Something that'll get it going. But the fact of the matter is, Jiraj, ain't nothing going on, right? You know that, right? When you're at the store, nothing's going on, nothing's going on. You can't do anything, right, to bring in those customers. You have to wait for the foot traffic to come in. It's the same deal, right? So if you changing zones and resetting indicators, it's not going to make the business move any faster. You know what I mean? You're not going to get any kind of edge from it, right? And this is the worst part for retail traders. Having to sit tight and not do anything when there's nothing to do. You take a trade here, you take a trade there, right? But there are times where business is kind of crappy, right? Business isn't that, it's not that active right now. The wholesalers are making money because they're both sides, right? So right now, even now, they're selling above VWAP. We couldn't even get it up. They're selling it here, right? They're selling it here because they have to, right? They have to sell it here. They'd love to sell it here. But if you're long here, you got to sell where the buyers are, right? You have to set your prices to where the buyers are. Otherwise, you're stuck with a bunch of inventory and you've tied up your cash. Right? Right? So sometimes it's just choppy and you can't do anything about it. Right? And the sooner you come to peace with that, right, and just relax, right? Because they couldn't all cover at the same time, Kunj. You got to remember the shorts aren't short 2 or 3 contracts. Some people are short 400, 500 contracts. So when the market went down to 64.08, right? Look how long it went down for. Look at the time underneath. Let's go look at 64.16. Look at the amount of time spent underneath it compared to the amount of time above it. It's a good question. The reason you don't understand why is because you don't trade size. So, and what if you weren't up at 3 in the morning? Right? Do you get it? So when it went down here, a certain number of people covered, and they got all the supply. It's like when you go to a store and there's a sale, right? There's a sale and there's like a really expensive, I don't know, there's a really expensive, I don't know, what do you kids wear nowadays? Like pair of sneakers. And they're usually $600 a pair and they're marked down for $99, but there's only one left or 2 or 3 pairs left. So you have limited supply. So for just that brief amount of time, the early bird catches the worm. Everybody is left out. That's why there's so much buying at 20, right? Or so much buying here because they're front running. That's all it is. It's the concept of time. See ya, Hank. Have a good one, brother. So we got 4 minutes left. And that's probably one of the slowest sessions we've had. Thanks, everyone, for coming out. Really appreciate you sticking with us in this slow market environment. Let's see now. I bet you as soon as I get off the stream, right, we're going to come down and see if we can take out that overnight low. Right. Thanks, Dado. Thank you, everyone. I really appreciate you being with me. Please come check us out at the Trading Syndicate. If you have any questions, DM me. We are starting a new coaching class in September. If you have any questions, reach out. I'll be around. Thanks, everyone. Have a great trading day. Stay out of trouble. Don't boredom trade. Go out and enjoy the sun. Okay. Bye for now.